There's a coworker on your team who doesn't quite add up. They have the same salary band as you, roughly the same expenses, same general lifestyle, but something about their financial situation is, different in a way you can't put your finger on. They never seem stressed at the end of the month. They take vacations without obvious financial planning. They make small decisions that suggest a buffer you don't have, and they're vague when money topics come up. That coworker might be doing something most people on your team aren't: building wealth on the side, quietly, without ever mentioning it at work. This isn't about a flashy second income that you'd notice from a mile away. The loud hustlers, the ones who talk about their side gigs at the water cooler, are usually the ones who haven't built much yet. The actual wealth builders are silent. They're silent for good reasons we'll get to. But for now, just know that they exist on most teams, and they've gotten very good at hiding in plain sight. There are specific signs that show up when a coworker is secretly building wealth outside their job. Some are visible in daily interactions. Most you only notice if you know what to look for. And once you can spot them, you'll start seeing patterns you missed before on your team, on past teams, in people you've worked with for years. My name is Nick, and I spend way too much time thinking about money, side, income, psychology, and why the quiet wealth builders at every American workplace are almost entirely invisible to the coworkers who sit 10 feet away from them. If you've ever looked at a coworker and thought, wait, how do they always seem to have it together financially? Make sure to hit that subscribe button and give this video a thumbs up if it ends up helping you spot the pattern on your own team. The thing that makes this topic interesting is that workplaces are weirdly bad at hiding wealth. You spend 40 hours a week with these people. You see how they react to stress, how they handle money topics, what they buy at lunch, how they take vacation. That's a lot of data. Enough that the wealth builders on your team have to actively work to stay invisible. They're not naturally hidden. They're carefully hidden. Once you know what to look for, the cover starts to come off. Let me set context first. According to Bankrate's 2025 survey, around 27% of American adults have some form of side income. That includes everything from delivery, driving, to small businesses. But the share who are actually building real wealth on the side, not just earning a little extra spending money, is much smaller. Roughly 5 to 7% of working adults, depending on how you define the threshold. That 5 to 7% is the population this video is about. They're not the loud hustlers posting about it on social media. They're the quiet wealth builders who learned long ago that visibility at work creates problems. Out of a team of 20 people, that's roughly 1 or 2 coworkers who fit this pattern. You probably can't name them yet. That's the whole point. They've calibrated their behavior specifically so you wouldn't. The Bureau of Labor Statistics counted 9.3 million Americans working multiple jobs in November 2025. The highest ever recorded, 5.7% of the workforce. But again, those are the formal multiple job holders. The people building wealth on the side often have just one W-2 paycheck visible. The wealth building is happening through investments, real estate, or a quiet business that doesn't show up in workforce surveys. So statistically, the coworker building wealth on the side is the exception, not the rule. But they exist on most teams of any meaningful size. Let me walk you through the 13 signs. The first cluster of signs is about how they handle the standard workplace stresses. Everyone else handles differently. These are the signs that show up in moments of normal organizational pressure. Layoffs, reorgs, budget cuts, the events that reveal who's actually financially secure underneath the surface. The first sign is they're remarkably unbothered by layoff rumors. When the company hits a rough quarter, when there's talk of restructuring, when bonuses get cut, they don't seem to panic. They're not in denial. They're not faking calm. They genuinely don't feel the existential threat the rest of the team feels. Their financial reality is, structurally different. You can spot this most clearly in the all-hands meetings where bad news gets announced. Most coworkers tense up. Some go pale. The quiet wealth builder just listens, takes notes, and moves on. The information is information, not a threat. The second sign is their reaction to overtime is consistent and bounded. They'll do a reasonable amount, but they don't grind themselves into the ground trying to impress anyone. They know their hourly value, and they know what their time is worth in their non-work activities. They calmly decline things that don't make sense. Most coworkers can't do that because they're afraid of the consequences. And this strange thing is, Declining unreasonable requests usually doesn't get them in trouble. Managers respect employees who set boundaries calmly. The fear of declining is usually larger than the actual consequences of declining. The third sign is they take their vacation days. All of them, often more than the average teammate. They actually disappear during the time off, not checking emails. Vacation taking is one of the most reliable signs of someone who isn't financially captive to their job. People who feel trapped at work rarely use their full vacation. People with built financial security use every day they're entitled to. And the disappearing part matters too. They're truly financially secure, don't check email on vacation because nothing professional could be more important than the time off. People with no buffer feel like they have to stay connected. The fourth sign is they have a calm reaction to performance reviews. They take feedback well. They don't get defensive. They don't get sycophantic either. Just a steady, professional response. This calmness traces back to the same root. They don't need this review to go well in any specific way. Their livelihood doesn't depend on it, so they can engage with the actual content rather than the political subtext for sign-zine. Now, the financial signals that leak out of work, even when someone's careful, this cluster is where the cover slips, even for skilled wealth builders, because some workplace systems force you to reveal your financial sophistication just to use them properly. The fifth sign is they have unusually robust health and dental coverage knowledge. They know exactly what their plan covers, what the deductibles are, and how to maximize benefits. That knowledge usually comes from people who have done the math on whether to keep the job for the benefits. The people who run the numbers carefully on the benefits package are often the ones with other income, options to compare it against. The sixth sign is they always have their max retirement contribution dialed in. 401k to the match, ideally to the legal limit. They mention it casually, like it's obviously the right thing to do. For most coworkers, maxing retirement contributions is not financially possible. They need every paycheck dollar for current expenses. The coworker who maxes the contributions has financial room their salary alone wouldn't allow. The salary deduction itself doesn't reveal anything. But the comments about it, the matter of fact, where they discuss the contribution caps, that knowledge is, where the cover slips a little. That financial sophistication, casually deployed, is one of the most consistent identifiers of someone with parallel wealth building going on. The seventh sign is they understand HSAs and use them properly. A health savings account is a tax-advantaged account for medical expenses that, used correctly, doubles as a retirement vehicle. Most coworkers don't know this. They either skip the HSA or use it just for current medical bills. The coworker quietly building wealth contributes to it, invests the balance, and lets it grow. They've researched the mechanics. That HSA knowledge is the cleanest tell of someone who's actually optimizing their financial life. You can't fake the specifics. Either you know how triple tax advantage works or you don't. That's 7. Let's get into the behavioral signs that show up in everyday interactions. The 8th sign is they have weirdly specific knowledge about tax topics. Capital gains, tax loss, harvesting, backdoor Roth conversions, pass-through entities. You can tell when someone has learned this from experience versus from reading articles. The person actually applying these concepts speaks with a specificity that gives them away. They've done the things, not just read about them. The 9th sign is they invest in their professional development on their own. Courses, books, certifications, conferences, they pay for themselves. That investment isn't about climbing the corporate ladder. It's about building skills that have value beyond this specific employer. They're treating their career as one asset among several, not as their entire economic identity. And the skills they pick are, selling, negotiation, marketing, sales, things that have direct independent value, not just things their current employer wants them to know. The 10th sign is they're surprisingly good at delegating and saying no. They don't accept every project. They don't take on every favor. They guard their time in ways most coworkers don't dare. Time guarding traces back to having other valuable uses for that time. People without alternatives accept everything that gets dumped on them. People with alternatives select what they engage with. The 11th sign is they have hobbies that look weirdly business-shaped. The woodworking that produces sellable items. The photography that has a client list. The cooking that someone is willing to pay for, these aren't full businesses necessarily, but they're activities with revenue potential built in. Even if the person describes them as just hobbies, real hobbyists don't produce sellable output. Wealth builders do. The distinction is like subtle but consistent. A genuine hobbyist makes things for themselves and their friends. A quiet wealth builder makes things that technically could be sold tomorrow if they wanted to. That's 11. The last cluster is about how they relate to the office itself. The 12th sign is they treat office politics with a specific kind of detachment. They engage with the work, but they don't get personally entangled in the political drama. They're not above it. They just don't have the emotional bandwidth invested in office hierarchies that most coworkers do. The office is one part of their economic life, not the whole thing. Politics matters less when stakes are lower. The 13th sign is the deepest. They have what looks like an exit plan. They're not actively executing. You catch hints of it in casual conversation, references to what they'd do if they left, plans they've thought through but aren't implementing yet. They're not actively looking for a new job, but they could leave on short notice if they wanted to. That state, ready to leave but not leaving, is the most distinctive marker of someone building wealth on the side. The optionality is real, even if they choose not to use it yet. But here's the part most people completely miss, and it might be the most important point in this entire video. The reason these coworkers stay quiet about building wealth isn't shame or secrecy. It's survival in the workplace context specifically. The moment a workplace knows you have meaningful outside wealth or income, the dynamics shift. Managers start treating you as less reliable, suspecting you might leave. Peers start treating you as either intimidating or somehow unfair. HR may scrutinize your work more carefully. None of this is malicious, but all of it is unhelpful. So the smartest move is just to never mention it. Do your job. Be professional. Keep the rest of your financial life completely outside of work. There's a specific failure pattern that happens when wealth builders break cover at work. A coworker shares too much about their investment portfolio at happy hour. A manager learns about a side business through a casual mention. The dynamics shift overnight and not in the wealth builder's favor. Once that information is out, it can't be put back. So the smart move is to never let it out in the first place, even at the cost of small social moments where bragging would feel good. There's an additional layer worth understanding. Many companies have policies, formal or informal, that discourage outside business activities. Conflict of interest clauses, moonlighting policies, non-compete agreements. Most of these are unenforceable for most outside work. But you don't want to be the test case. The smart wealth builder structures their outside activities to be technically compliant and operationally invisible. And the deeper thing this reveals is that American workplaces are quietly designed to maximize the dependency of employees on their salary. The benefits structure, the policy structure, the social structure all push toward employees being captive customers of a single income source. Wealth builders sidestep this without confronting it. They take the benefits, they accept the paycheck, they follow the policies, but they refuse the underlying premise that this employer should be their entire economic identity. That refusal is invisible to everyone around them. It looks like normal employment from the outside. The refusal is internal, structural, and the source of their freedom. Look, here's the practical takeaway. If you can identify someone on your team who fits these signs, you have access to one of the most valuable resources in your professional life. Not because they'll teach you their system, they probably won't. They've spent years learning to be invisible about it. They're not going to break cover for a casual conversation, but because you can study them quietly, watch what they do, not what they say. See what they don't worry about. See where they spend energy and where they don't. See how they engage with the workplace. That observation is free education. You're getting a live case study in financial security, sitting at a desk near you. Most people walk past these case studies every day without noticing them. The deeper question is whether you could become one of these coworkers. Whether you could be the quiet wealth builder on someone else's team 3 years from now. You don't need a six-figure side income. You don't need to be financially independent. You just need to start building one stream of wealth outside your job and then stay quiet about it. The quiet part is, often easier than people expect. Most coworkers aren't paying close enough attention to notice. Most managers don't track personal finances of their reports. You can build for years before anyone suspects anything. That privacy is a gift. Use it. Build the structure that gives you optionality at work without ever mentioning it at work. That stream can be investments, a side business, real estate, skills you can monetize independently. The vehicle matters less than the existence of something parallel to your salary, and the quietness matters more than the size. A small wealth stream you stay quiet about is more durable than a flashy one you announce. The quietness protects the building phase, which is the longest and most fragile part. You're not behind for not having noticed these patterns before. The whole point is that they're hard to see. The wealth builders on your current team are betting that you won't notice them, and most coworkers don't. The math doesn't care about how invisible your wealth building is to your team. It only cares about whether you build. The quietest version is often the most effective one. Your future self, the one who's either invisible at work because they have other resources or visible at work because they don't, is counting on the quiet building you start this year. Trust me, they'll thank you for building wealth that nobody at work ever knew about, long before the dollar amounts felt impressive.